everyone, welcome to today's video. How could China trigger a recession into a full-blown depression? Recently, there's been a lot of talk about the collapse of China's $7 trillion housing market and the serious implications it has on the global economy. Now, the question might be, why what's happening in China will impact how much we have to spend in our daily commodities? Well, it's because of the concept of globalization. In this era of globalization, even though every economy has its own currency and supply for goods and services, they like to engage in businesses overseas as it serves them with competitive advantage by manufacturing abroad and buying cost-effective materials. But the impact of this overly affiliation goes both ways. While the globalization helps to build competitive advantage, at the same time, a downturn in one economy shows a falling domino effect on the entire global economy, which we have already started facing in 2023. Europe, for example, has begun to face an oil shutdown as their dollar falls to its lowest level in 20 years, and the global inflation is the highest it's been in decades. Tighter monetary policy is threatening to cause a worldwide recession. And what's causing this situation? First, we have the Russia-Ukraine war. The invasion resulted in a sudden increase in commodity prices like oil and gas as production was disrupted. In addition to that, other commodities were affected as well, including wheat, nickel and aluminium, of which Russia is a big producer. The impact extends even farther since Ukraine was one of the biggest suppliers of semiconductor raw materials. This has caused the price of cars, computers, televisions, basically everything with a computer to rise. Secondly, we have supply chain bottlenecks. Due to the pandemic, year over year the prices of automobiles has gone up by nearly 40% due to labor, material and supply chain bottlenecks. But just as they were beginning to come down, they went back up. Finally, we have higher interest rates. In an effort to fight inflation, the United States raised their interest rate at a slightly faster pace than the rest of the world, causing the entire economy to enter into a state of inflation. But a topic that's been recently gaining a lot of traction is China. They are one of the world's largest economies, responsible for manufacturing 20% of the items that we all use day to day, which are currently at the severe risk of complete financial collapse. There are three main factors that have contributed to China's economic shutdown. First, the impact of zero COVID policy. This quite literally means that there's zero tolerance for the spread of COVID to the point where China will enforce strict lockdowns and maintain a tight regulation and do anything in their power to prevent their population from becoming infected. But as a result, their economy is expected to lose its ground. Production is slowing down, supply chains have continued to be severely impacted from a backlog of shipping, and their growth is now expected to be non-existent. Second, the real estate market, fueled by massive borrowing, has contributed to the slowing down of their economy. Third, the Evergrande crisis. A major Chinese real estate developer with a debt over $300 billion has triggered fears of a default and caused ripples throughout the global financial system. From all these events, it is evident that the global economy is already facing a recession. China might as well just contribute to that recession, turning the recession into a global depression. So it's clear that there will be serious implications for everyone, and it's important to stay informed and understand how it will so we can be prepared for the times ahead.